So hello there. While I'm being the technician and the on-air star. Woohoo! Okay, anyway. Today, I'm just coming to you live every Thursday here at the center. I am Shirley Crawford here at the Women's Business Center, RVA, located at 1510 Willow Lawn Drive, directly across the street from the Kroger at Willow Lawn. And so we work every day with women entrepreneurs and entrepreneurs in general to make sure that you are successful, that you start, sustain, and succeed in business. Our core heart and mind and body and spirit is all about women. But guys, we love you too. We want you to succeed. It's just that everything here is women-centric. But we do offer free consultations for all women, men, and youth. So while we're all experiencing COVID-19 and quarantining and all kinds of other things, we want to bring to you information to make sure that you're continuing to grow in business. For those who've been thinking about a business, here's a great time for you to learn the tools that you need to move forward. For those of you who are in business, it's time for you to make sure that you're running properly. There are so many businesses that are kind of built on quicksand. Like all it really takes is just one little ping, which we're seeing right now, right? And they're literally falling apart. So we want to make sure you have the skills, the tools, the resources that you need to be successful. So this screenshot is really weird, but I might stick with it because you can at least see it. I now recognize what the problem was. Let's see if I can fix it really quickly so that we can get down to business. And of course I can. I was just looking at it all wrong. Okay, so that's helpful to know. Let's try that. I love technology. It's a wonderful and amazing thing. For those who've seen me before, I am all about geekdom and learning new things. I don't like it when it does weird stuff. But anyway, today I want to talk to you about, I had it and then I lost it. I want to talk to you all about the importance of a cash flow statement. Right? So right now is when you really recognize that the words I'm about to share with you are very, very, very true. And if you'd come to me before, anytime I do a consultation, I always send people like the cash flow statement template, and I say, this is the first thing you must do. The first thing you must do, or one of the first things you must do, is actually complete a cash flow statement. Now, for those of you who are looking around like, I don't know what that is, don't worry. By the time this is over, you will know. Did I get it? Did I get it? Did I get it? My talking head is in the wrong place. But I'm going to be okay with that. Okay. And this is what it's like to be an entrepreneur, right? Because you have to do things on the fly. And then you have to also determine what thing is the most important. Like, really? Really, that's the question I'm asking right now. Like, how much of this is the most important thing? Like my talking head not being in the right place. Okay, I think we have it. I'm not going to change it. So hopefully this view works for you. It looks fine on my end, which might not mean anything because you were the audience. Okay, so moving ahead, here's the deal. Like right now you are really learning about your cash flow. So there's a difference between a profit and loss statement, which everyone always asks for, right? They're like, oh, let me see your profit and loss. Right? Your profit and loss statement has this overarching theme of this is how much you got in, this is how much you pay out. But it doesn't give you any details, no specifics, no way for you to drill down. So one of the things I always tell my clients, so let's say you're in a transportation industry, right? And so you're thinking about changing who provides your gasoline. And so in your profit and loss statement, there's no way for you to look and see like the difference in how much you've been paying. And so there's no drill down on the details. So it makes it a lot different for you to pivot. Like right now, this is a season of pivoting. This is the time for pivoting. And you have to be quick about it. Your profit and loss doesn't tell you that. Right? So like the sample that I have up here, like we're going over accounting, advertising, assets, bank charges, cost of goods sold, depreciation, electricity. You can read and see the rest of them. Motor vehicle, office supplies. But it doesn't say the line item that talks about gasoline or like what do office supplies really break down into. And so there are ways you can set up your cash flow statements to be able to help you pivot a whole lot quicker when it comes to those kind of decisions. So technically, you need both. You need profit and loss statements. You need income statements. You need to understand ROI and all that good stuff. But today, we're just focusing on cash flow because this season alone is really one of the reasons why I am adamant about cash flow statements. And so let me take you to the cash flow statement. And then, okay, so here's the first thing. The first question you're going to want to know is, what exactly is a cash flow statement? If you haven't heard that term before, okay, I shouldn't be amazed because lots of people don't talk in cash. We are a credit-driven society, so we think about accruals and cash and the fact that you have an invoice out there and you count that as money. On your P&L, you can count that. On your profit and loss, your P&L, you can count that as money, but you don't count it as money on your cash flow statement. The cash flow statement is really a projection about how much money you believe will flow in and out. That's why it's a cash flow. It's coming in, it's going out, right? So that's cash flow. It helps you figure out when you might need more money, right? So if you are a seasonal business, so let's say you're Kings Dominion. I've been thinking about Kings Dominion a lot because I'm like, are they going to be open this summer? I hope you are Kings Dominion. I'm rooting for you, but I don't know. And so they're a seasonal organization, right? So they predominantly have to pay out all kinds of money for employees, the whole staffing piece, for all the cleaning of the park, all the electricity that now increases for equipment that's been down. I mean, they open it up and run it and test it every now and again, but it's running back to back to back to back to back all day now. And so now they have all kinds of additional expenses during the season. So the summer, and then they've tried to extend their season to, increase their cash flow. So they have like Halloween Fest. I don't even know what it's called. I don't do Halloween. And then now they've included like the lights for Christmas. So while they do have a couple times in the year that they have major operations coming, the rest of the year they still have a limited staff, but for the most part, outside of cleaning and maintenance, they're shut down, right? So that means, but they still have expenses, but who's buying? So unless you're buying a season pass, for the most part, you're done. And so when January rolls around, Kings Dominion isn't seeing the same money they saw all throughout the summer. So then that means while they're raking in the dough, which they rake in quite well from all those food sales and miscellaneous items and souvenirs that we all purchase there, even though I've had a season pass since I worked there when I was in high school. Yeah. Even though they have all that stuff during that time period, during their high season, the rest of the year, they're not really making any money. So when they're not making any money, they still have expenses. They need to make sure they have cash on deck to pay things, right? And so the difference about your P&L and your cash flow statement is that, let's just say you got a contract with the federal government. Yay, you, right? Because even if they have stuff that ebbs and flows, eventually they will pay you. They will pay you. It might take 6 months. It might even take a year. It could take potentially longer, but it's coming. But on your cash flow statements, you do not credit money to your business until you see the money. So even though you did the job, in this example, why I say February, if you did it in February, but they don't pay you until April, then the cash it's not listed on your cash flow statements until April. And so here is the real beautiful thing about this, right? So your employees don't get paid monopoly money. They don't. Dominion doesn't get paid in little coupons and bills. No. You will still have expenses whether or not money is coming in or not. So you need to know how much money you need on hand to take care of those expenses. Those things that'll keep coming. And one of the reasons why, when you look historically, we always talk about how businesses go out of business, right? Normally within the first 3 years, most of them, I forget the stat, forgive me, I'm so used to quoting it, I should know. I know it's at least half, but in the first 3 years, most businesses that start are out of business. And this is the number one reason, cash. So they're paper rich, cash poor. And so what that means is like that contract I talked about with the federal government, right? So let's just say you had a $35,000 contract with the federal government. That's beautiful. On your P&L, you could list it. So when your investors and others are looking, they're like, oh, well, you look like you're in the clear. But if you haven't seen that money yet, and sometimes you won't. I always tell people, like I've worked for a couple of Fortune 25. And Fortune 25, Fortune 500, Fortune 100, etc. And this is what happens, and I'm not kidding you. Oftentimes, they make more money keeping their money in their financial institutions than they pay in penalties for not paying you on time. So like one company I worked with literally held invoices and only paid them twice a year. Does that sound insane to you? It sounds insane to me. And God forbid when they went to process it that the person who had sent the information had missed information and didn't respond back promptly, then you would go into the next 6-month batch. And so I used to run down to the accounting because I'm an entrepreneur. I've always believed in small business, no matter where I worked. And so I was always trying to get small business vendors to work with us. So whenever I got the opportunity to be the purchase agent, I would always try to support a small business and a local one if I could. And so I was constantly running down to the accounting department, whose manager I knew by first name clearly, to say, please pay my people. Come on. Can I get the credit card? Just pay my people. It's okay that you write these 3 checks to the people that I dealt with this month. I don't care about anybody else's stuff. I need the small business owners who have given me great service, great product, great customer care, and I need them to be taken care of because I need them to be able to feed their families. Now that's you. I was defending you, talking about you. And that's what you have to deal with, is that there are lots of those companies. They have the money and they are making great money in interest and in investment tools, and so are not as concerned about your 2% penalty, even 10% penalty. It doesn't add up to what, to measure against what they're making. So you have to keep all that in mind. You have to be able to say, well, I want the federal government contract, but I recognize that I don't know exactly when I'll get paid from it. So your cash flow statement is going to say, hey, if you know that you are doing this and you're going to get paid from the government, you should have been estimating and thinking, I'm not going to get paid for 6 months. And how are you going to pay your employees? How are you going to pay for electricity? How are you going to pay for internet? How are you going to pay for phones? How are you going to keep paying so that you can stay in business? This is why a cash flow statement is the holy grail of information that you should have for your business. So now that I've shared with you the why a cash flow statement is so important, I want to just quickly go over one with you. And so here is the sample one that I normally send out. So it says 2016 on it, but you know how to change the year. It starts off very simply. You write your business name, your name if you want to. It's really irrelevant. The first thing you see there is where it says beginning cash, right? So this is what you actually have in the bank. So we always talk about liquidity. This is not even necessarily talking about that. This is really like, do you have cash? Do you have money? Can you pay something with this? This is all we want to know. All right. And so up top, it talks about your cash, right? So what did you start with? And then month to month, you're going to say, okay, I started with this amount of money. So this is either my end of the year or end of the quarter, whatever dollar amount that I now have on hand. And then you're going through the other pieces and you're going to add in any additional cash you've received from services rendered, products sold, gifts, grants, whatever. It all counts as long as you have it in hand. Did you receive a loan? Are you one of the ones who got an EIDL? Did you get a PPP? If you're doing any of these other grants, whatever else, they all go into this category. Or, God help us, did payments received? Did people pay you for the services and product that you rendered? An amazing concept. So all that goes up top. And then you start breaking it down in the bottom. Now, the thing you should always know about any income statement, cash flow statement, P&L, any of your financial statements, that you can alter and tweak them, right? So if a category doesn't apply to you, then remove it. All right. So I stop here to say what I didn't say before. I am not an accountant. I do not do your taxes or your finances. I do discuss your finances frequently with clients and other individuals. Study to learn the information, but I do not stay on top of what's the tax code for this year. So this is not coming from a tax perspective. This is coming from a business consultant perspective. Okay, that's my first and foremost. So also what I often recommend, especially when you're getting set up, when you're first setting up your QuickBooks, whatever else you use, Peachtree, an Excel spreadsheet, whatever you're using, you should set up your chart of accounts. And your chart of accounts looks something similar to this, but not quite. And you should set it up with your accountant or your bookkeeper. And so what you'll do is you'll talk about what are the different things you spend money on. So if you spend money on Post-it notes, that's office supplies, well, how much do you think you're going to spend on that? If you spend money on bubble gum because you work with a bunch of kids and that's how you keep them from being hyper, I don't know. You'll go over your types of expenses and your types of income with your bookkeeper or accountant, and they will tell you what category that looks like. So all of these pieces to the left here where it says like wages, materials, inventory, telephone, those are categories, right? But keep in mind, this is a cash flow. This is not your P&L or anything else. This is just a cash flow statement. But I want you to understand that anything can be personalized to your business. Always keep that in mind. There is no standard like template. There are some keywords people look for, but for the most part, you review that with your bookkeeper or your accountant, and they'll help you figure out exactly what you should have included. Okay, so for this sample, which is my standard template that I give everyone, for your cash flow projections, you're going to figure out like materials and inventory. So if you make Post-it notes, I just happen to have Post-it notes on hand because I use them a lot. So if you make Post-it notes, then for the adhesive, for the paper, for the ink, what do you need? What materials and inventory do you need to make that happen? Wages are kind of straightforward. Payroll, taxes, and benefits, right? So you can read the rest of the categories. I'm not really going to read them all, but you get the idea. And so one of the line items in here in particular that I frequently adjust is my advertising. So like right now, kicking off another business partnership. And so this is one of our big discussions because if you're going to kick off, then there should be advertising. There needs to be media. And so, but you have to know, one of the things we always teach is that you have to share a message 8 times before anybody gets it. So then that means, okay, what's that frequency? So what's that look like initially? What do I need to budget towards that media expense? Well, I know that I make more money, hypothetically, in the summer than in the winter, and then I make more money in the spring and less in the fall, right? So if that's the case, then do I want to advertise more in my down seasons? Because those are the seasons when people forget about me and I want them to remember and maybe bring me more business. Or do I want to up my media and advertising during my peak times because there are people are looking for me and I want them to know I exist out there in comparison to my competitors. So it's a cash flow statement, but it's a whole philosophy about how you run your business, what information you need to know, what do you need to know next. It's a lot of information all grounded together. And so month 1, this all depends on your fiscal year, right? So if you have a standard calendar year, which is January to December, then month 1 you can now rename January 2020. Right? If you have a fiscal year, then that's July 1, right? So then July 1 to June 30th. So your month 1 is actually July 2020. So keeping in mind the whole thing about your financial statements, they look intimidating, but they're your friends. So anything you can quantify is something you want to have close by. So when it's quantifiable, when you can sit down and say, okay, I want to make, I have clients and they'll sit down with me I want to make $1 million this year. And I think they think I'm going to go, no. I'm like, okay, you want to make $1 million. Then how much money do you need to be making per month? And so we do the projections. So keeping all those things in mind, you're also looking at, okay, I want to make this much. This is what I want to do. Where do I need to be lining it up? So if I want to make $1 million this year, then maybe that's part of that. I have to go to more networking events. right? I need to go to more conferences. I need to be out there having vendor booths and vendor tables. So that's money I know I need to be budgeting out for. So that goes into my travel and entertainment, my mileage, some of my miscellaneous, depending on. Please let me note to you now, in general, for your accounting purposes, limit miscellaneous as much as possible because no one knows what that is. And it's not supposed to be a catch-all. It's really supposed to be for something that is totally unique and not normal and will not be repeated. And so it's okay to put it there. Otherwise, take one of those other categories and rename it or create another category, because miscellaneous will not help you plan anything. Okay, so when you're done with this, you should either come up with a surplus or a deficit. So that's a profit or a loss. And showing a loss when it comes to cash it's not a deal breaker. So if you're showing that for a month, I could show you some real numbers, but I won't because they're not yours. So if you're showing a loss, like we talk about seasonality, right? Seasons are normally 3 months. Like, every season, there are 4 of them in a year. They're normally 3 months each season. So if you have seasonality, then it might be in season 1 that you are negative 5,000. Season 2, you could be potentially positive 10,000. And so that means that's money you should be allocating to say, okay, if I know I'm going to have a negative here, then I need to make sure I'm saving to the business. This might not be the time to buy that new plotter. I was looking at a plotter. Ooh. It's like $7,000, but it was amazing. And so, like right now, in particular, with things the way they are, this is not the time to spend $7,000 on a plotter. Well, depending, really, but for the most part. So, if you know by your seasons that although you might have $10,000 plus dollars, like you might have a surplus, but you can look at your cash flow and see that, but in 3 months' time, I'm going to have a deficit. So I should put this money either into a 3-month investment tool, a 3-month money market account or something, and so that I'll have it later to use it when I need it, right? So that's the beauty and the purpose of a cash flow statement, all right? So if you have specific questions, you can let me know. And at this point, I'm actually wrapping it up. So the bottom line of what I really need for you to know is that one, there's a difference between your profit and loss statement and your cash flow statement. Right? So the beauty of the cash flow statement is really understanding what you have in liquid cash. Cash is king. You can spend it today, you can spend it tomorrow, as long as the U.S. government is open and that is the legal tender, then you can spend away, right? And so unlike trying to, I have a lovely vehicle. So right now it has an assessed value of whatever it has. But if things keep crashing and doing other things, then the assessed value might differ. And so while there's inflation and deflation and blah, 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 still generally your dollar is your dollar. Unless you're trading internationally. So that's why cash is always like the number one thing. All right, so as you see before you, here are the ways to contact me. I am Shirley at WBCRVA.com, right here at the Women's Business Center. Please feel free to visit our website, WBCRVA.com. You can follow the center on Facebook, Twitter, and Instagram. We have Pinterest too, but we don't do much there. If you're interested in Pinterest, let us know. We might, start sharing more. But that'll be at WBCRVA. And then to reach me directly on Facebook, I'm at Shirley E. Crawford. And that says Twitter, Shirley E. Crawford. With a 4. And Instagram, I'm Shirley E. Crawford as well. Or Shirley.Crawford. I should know that. I'm sorry that I do not at this time. I will be sure to find out. All right, so if you have any other questions, you can let us know. As I said, we're doing one free seminar for you all every Thursday at 1 p.m. as long as we are all in this together for this pandemic, for the COVID-19. So if there's some other topic you'd like to cover, please let us know. Thus far, we've covered, and you should be able to see. You can go back and still see them at present. They might be removed at some point, but for now, they're still there. And so we've done professional social media, HR response to COVID-19, how to start a business, how to write a business plan, how to complete a business model canvas, and today we talked about cash flow statements. So I believe that's it. If there's anything else that you have a question about or you'd like to find out more information, let us know. Once again, Shirley Crawford, the Executive Director of the Women's Business Center, RVA. And until next time, stay sane, stay safe, and sound.